Hi friends, this is Anamka Vijay and welcome to my YouTube channel Forex Surfers, and this is the educational series is going on. Nearly we completed the part 7 up to part 7. Now this is the part 8. So in the past we are discussing about that corrections, impulsive finished, correction is also going to end, and this is the one I love, this kind of corrections, and that is called as a double correction and the triple corrections. So before we get into that analysis through the Elliott waves, this is my disclaimer. So just read carefully and listen to what I have written. And finally, I'm not asking any investments. So be cautious and beware the fraudsters. I'm not responsible for any losses if you took the trade according to my trade plans explaining here. As well as I'm just sharing my Elliott wave knowledge through this video. So I hope this video help a lot of peoples for the beginners, and this is my Christmas and New Year gift for all of the peoples who love the Elliott waves and who struggling the Elliott waves in the correction part. That is the most important, and each and every video I'm saying the same thing I'm telling, and you have to concentrate that correction part, then only you can catch that impulsive. So just we get into that for that double threes and the triple threes. So here we go. So in the past we saw all discuss about that triangles. So next is a very interesting for me to explain about this kind of double threes and triple threes. So double three means it's a connecting the wave of double correction, and the triple correction means it's going to be a W X Y X Z. So that means three corrections connecting with the wave of X. So that's we will see in that USD chef about that double corrections. So this is the weekly chart. Mind that this is the weekly chart. If you I need to trade means for that intraday or the swing, we have to get ready that this kind of analysis, then only I will know where we are and what we have to do to take a long or a short. Even though if it is a intraday trade, I will look over all those things, where we are and what is the safe trade, how we have to hold if it goes against us. So everything I saw, get ready, and then only I will trade and I will go for that uh, swing and positional. So if we look over that weekly chart, that is most of them are positional uh, trade setups. So first I will explain you here. So this is the long trend in the bearish, and now we are in that correction part. So what kind of correction is this? So whether this is a double correction or triple correction, just we can say it is a correction, it's going on. It's not like that. Correction is going on. But whether it's a long correction, see from the 2012, it is still in the correction. It is not in impulsive way. This is the one we got the impulsive. After that, it's all in correction. So for example, here from 2015 to 2020, it's a 5 years of correction is going on. And here from the 2012 and to 2014, the 2 years correction is going on here. So after that, the market will be in the correction part of most of the nearly 70% approximately, and the 30% only the move of impulsive waves. So only if you are too good, and if you are more practiced that the correction part in the chart, and you need a more of time to spend in the screen in front of the system, then only you can identify the trend and to the going to end at the bend, and then only we have to catch the impulsive wave. So in that I just show you that it is the end is going to end in the USD chef, and I'm in the long. You know very well if you are watching me regularly in that weekly analysis. So how I had made this analysis just for you. Yeah, this is 1 2 3 and 4 is a triangle, and fifth way is got ended, so that is I marked it as A. After that, B is a correction, and this is in the flat correction, and this is the going the wedge formation. We had seen a lot of things. It will happen only in the C wave. After that, the impulsive wave. So once it corrected the flash crash of that SNB news event, so it's nearly 3000 pips. So the in this we no need to we can't label it as whatever it is, because it is not a three-way structure and it is a single structure. But this I had labeled it as a X. This is a correction. This is the impulsive. So this is a correction. So I label it as a X. It may be wrong also. Mind that this may be wrong also. This could be a, but I'm not going to, just for an education purpose I need to explain you, so I kept this as an X wave. So this one simple correction is ended in the zigzag pattern. So 5 3 5, so that is called as zigzag pattern. We can mention here 5 3 and 5, so that is called as zigzag correction. After that, this is the corrective part. So here it's a connecting wave. So what is the double correction? One A, B, C is completed. After that, this is a W and this is a connecting wave. So like that, I had mentioned this as a connecting wave. So that could be a zigzag or a flat, whatever it can be. But after that, the next A is an impulsive and B is a triangle, and this whole thing is a zigzag. Again, one more zigzag. So this is called as a double zigzag, what we already saw in that my previous zigzag correction. So this is a double zigzag connecting by the X wave, and after that it didn't break this low yet. So that means still there is a correction is going on still. So that could be a triple correction. After that, maybe another one more impulsive wave can be to the higher side is possible. So that means we are still in the correction. So one correction in the impulsive wave is going on. After that connecting wave and another impulsive is finished, and we are in the next correction part. So this correction is a flat correction. How I did? So this is a one three-way structure. After that, another three-way structure, and the bigger one is a C wave or Y wave. It is going to end. So in that also I have labeled it. This is a diagonal triangle pattern. It is going to end. So if it ended here, this is looking like a flat correction. How means this is the three-way structure, again the three-way structure, and this is a five-way structure. I will hold this, and this is the five-way structure. It is going to end. So that means it's a B C connecting by the W X, again A B C. So this is the end of the Y, and here we are going to end the flat correction. That is called as another X. How we make it is this as a X, and this is also X. If it break this high, that is in the three-way structure, that is the end of the Z wave. So that is called as a triple correction. Here W, X, Y, X, Z, and again it is going to be a trend side. So now we are in the downtrend, and here the example for that bullish trend, here it is a downtrend. So that vice versa, inverting this as a downtrend, and here is a one correction is got ended, and this is a continuous a second correction, and this is a one more connecting wave, and again one more ABC has to happen to above that this high of what we marked it as a Y wave. So here it is a, we can mark it as a Y, then this is the X, and Z has to finish. That is called as a 5-wave corrective pattern also, or it is a triple corrections. You can uh, catch my explaining what the way. So this is a one correction ended the connecting wave, and the another corrections got ended in the connecting wave VR way, and one more impulsive wave to the upper side. So that is called it as a triple correction has to end. After that it has to be in the downside. So mind that it could be one more wave to the downside, that we have to look all those things you need to label. Then only you need to know whether it is after, if it is making the high, whether it is going to the downside, or it will be in the 50% and one more high. So that is the next. As of now, that second double correction impulsive wave is got over, and we are in that next correction. So as same thing in USD JPY is also happen here. See, this is the one more ABC. I said if it is a 5-way structure, we need to make it as a ABC. Otherwise, if it is a 3-way structure, we need to make it as a WXY. So again, this is what I said here is an expanded flat. After that, it's a 5-way structure is got completed. So this whole thing is a flat correction. That means 3, 3 and 5. Here also the connecting wave. Here that is called as a zigzag, this connecting wave. So this is could be a any 3. So this is the flat correction. Here we ended in the flat correction. This could be any 3. So that is here it did a zigzag, and after that here for example they given as a triangle. So it not could be a triangle. It there is not compulsory, it is not to be a triangle, it could be a zigzag also. So for example they given, so this is here. So another 3-way structure, one more 3-way structure, again the 3-way structure, and I said this is the whole thing becomes a running flat. Here it's a WX connecting wave, and here one more ABC is a ABC is a B, because here we got the 5-way structure to end of the trend for the double corrections. So as of now, one ABC is over in the flat correction. This is a zigzag. So another flat correction is got ended. So now whether it is going to make a one more corrections, or from here it has to be in the bullish side, that we need to watch this wave correction. And the same thing happen in the 4-hour chart here also. The same pattern, ABC is a flat, and ABC is a zigzag, and ABC is a flat correction. So one flat here, sorry, this is a zigzag, sorry, very sorry, this is a zigzag A, B and C in the wedge formation. So this is a zigzag, and here is also a zigzag, and here is also a zigzag. So here is a double zigzag. Here the correction is any 3 is also zigzag. After that, this is a connecting wave in that zigzag. Again there is a lot of zigzag, 1, 2, 3. So here it's a 3-way structure. So this is the irregular flat, and we are in that downtrend. So here it's a end of the X wave. So one correction, connecting wave, another correction, connecting wave, another one correction is got completed. So 1, 2, 3 is got completed. Now the whole pattern is going to end. So in this here, ABC is a W, ABC is a X, ABC is a Y, and the Z way is also a again WXY pattern. So that we need to understand what it is going on here. So one continuation, so connection wave, W, X, here Y, and here X, A, B, C, Z means it has to bounce from here, and no need to break this low. But it already broken means here that X wave is here in this wave, that is a complex correction again in that Z wave, and here it's already broken. So from here it has to bounce or one more low to the downside and then again bounce. So these are all the complex corrections connected by the WX for that triple corrections and the double trees. And one more thing I will show you, and you can understand that in Australian dollar, New Zealand dollar. So in that Australian dollar, it's a weekly chart. Here is a beautiful chart. Here is a one impulsive wave, but in the three-way structure, right? So now if it is the W, Y has to end above that W, Y has to end above this W. But that X can or A, B can travel below this also, for that making it irregular flat. So that is what it already happened here. It's already broken the low. So that means this Y could be end in the running flat, or it could make a expanded flat that we will see in later onwards. But as of now, here we come to that A, B, C is a A. So A, B, C is a B, and the C is in a wedge formation of the ending diagonal pattern. So here one flat correction is got ended. So another A, B, C. So connecting wave A, B, C, B, and then C is a five-way structure. So here is a one more flat correction. After that, here what it written is flat any three zigzag. It's happened here. It's a flat any three and the zigzag. So A, B, this is in five-way structure. This is in five-way structure in the wedge formation. After that, the three connecting wave for the B, and then C is also a five-way structure. So this A, B, C is a zigzag, and it's already retest above the 90. It is also valid, I said, as of now. It is not happen to be in the book as it what it is written in the book. It won't happen in the real market. Mind that zigzag will be in the 38.2, sometimes it will be a 50 maximum, but that is all uh, exemption cases. It can travel above this 90% also, 80% also, 78.6. So in this exemption cases we need to be, so this could be a uh, if we need to be a five ways also, or it could be a three-way structure also, whatever you can make it as a labeling here, but that answer is whether it is a zigzag or a flat. So it is called as a triple. And whatever this one correction is got over, and any three and another correction is also got over, from here it has to shoot, but again it failed. So that means triple correction is going on, and it's also ended here. So this is also a zigzag. A and B is an irregular flat. After that it shooted the three-way structure. So here the intermediate wave three-way structure, and this is a five-way structure. So this is called as a zigzag. Again one more A, B, C. So that means here one correction is a flat, here is a any three, and again this is a zigzag or a flat, and again the correction part, the connecting wave of zigzag, and here is a one more zigzag. So this we call it as a W. Here is a W, X, Y, X, Z. So that is why I have written Z. So this W, this is the X, and whether this A, B, C is got completed, or it is still alive in the expanded flat, and it is going to hit the target. If it is a expanded or running flat, expanded means it has to go above this, that is why I have written as a positional target. Or if it is running flat, it has to be declined within this zone. If it is above, means that could be a expanded flat. If it is declined below this or it's already ended? That is the question mark. That is why it's applying in the real chart. See, this three-way structure is already got over. So what we think, whether it is ended in the here and we are on the downside, but there is a lot of chances it could be a three-way structure and this is the five-way structure. So this could be a running flat of in the expanded flat in the B wave and one more A, B, C. So in that case, how you have to trade means make it this as a stop, and if it is coming near to that, see, because I'll show you in the daily chart, it's looking like a five-way structure is got over. So if you need to take a risk here after the three-way structure, you have to going to make a stop loss of this, because why means this is a five-way structure as a A, three-way structure in the running expanded flat as a B. C is a structure of five waves contains. So in that five waves, this if it is this is the wave 1, wave 2 cannot go below this, so that will invalidation point and this is the stop loss. So if it is coming in the three-way structure of the two second wave, you can buy here and make a stop loss, and according to your capital you can decide your lot size, positioning the size, and then look for that bigger reward to break this high near to this W, whether it is going to make a running flat or it is going to be an expanded flat, that is a question mark. So this is called as an triple threes. So I hope, and one more thing I will show you, whenever we are too good in the correction, then only we can catch the impulsive wave. How I trading the plan to trade this AN, Australian dollar, and the New Zealand dollar. So this kind of trade setups you have to do. So in this you have to take a risk, because for the huge risk reward, at least if it is going to be a five ways also, here one more three ways has to happen and again it has to decline for the downside. So here is the main in the pullback, we need to watch this pullback and place the stop loss and move for that big reward to reach this level of what I said in the positional target. So that we have to decide. You have to decide how the wave formation. You have to look for that wave formation here inside that intermediate wave in the daily, 4 hours and that 1 hour. Then only you will get a more confidence. And one more thing is, if you are a beginner, do it in the demo account. Don't be in the for the practicing. You don't do in the real account. Work hard, practice more, and spend the time in the screen, in front of the screen. That screen time is the most important for the Elliott wave trader to find out the patterns, and then after the experience only you will find out without knowing anything. See, if I'm just seeing this is an, it could be a running flat also, so this is a zigzag. So like that you can catch that wave immediately. So whether if you are going here, so this is the fourth wave, because in the intermediate wave fourth, that next fourth, bigger fourth is also declined, means this could be a fourth wave. And after seeing this is a wedge formation. So we are in that ending stage. Like that, after this wedge formation it's broken, so we are in that bullish side. So like that we can see, this is also a wedge formation or channel. So like this you can you have to practice, then only it will be in market will be in your side. So no need to overtake the market, we need to go along with the market to make a more profits. So I hope you enjoyed this double threes and triple threes what I have explained in the USD JPY, USD CHF, and this is the Australian and New Zealand dollar. So I hope you enjoyed this and you can learn a lot. I hope you learn a lot from me, and I'm sharing this knowledge. So have a nice day, and we will look at the next video of channeling. So have a nice day.